A.Balasubramanian is a lone ranger in an industry that is well known for its high attrition rates. He's been with Birla Mutual Fund since its inception in 1994. He has risen the ranks through several market peaks and troughs and is now the CEO of the fund house. Bala, as he's popularly known as, specializes in managing hybrid funds like Birla 95, Birla Advantage Fund and Birla MNC. He is the man responsible for growing Birla Mutual Fund's assets from 15,000 crores in 2006 to over 60,000 crores today. It's a tough job in a bad market, but Bala is not one to get bogged down by negativity.
The noise level, especially for India, both in domestically as well as global market, especially in the media space, is very, very high, which is somewhat negative message that goes around. But look from logically from India perspective, though the fiscal deficit has also been high, it's been rising, the debt to GDP for India is just about 70%. And the banking system to the funding actually the entire GDP growth, it's just about 70%. When I compare that with China and few other countries, it is a lot higher actually. At the same time, commodity prices globally, especially India being actually the largest consumer of the oil, commodity prices are globally have cracked by about 22%, especially crude oil prices come down by about 22 or 23% year to date, which is a big positive actually for India. The other commodity prices too have corrected. And India being actually a country which is largely dependent on import of oil, definitely I think it's a little benefit. The question is how the current account deficit will move around. So any direction which is coming on the actually rupee appreciations could have somewhat of a cascading impact to actually make that country a little better. Then second, of course, is though we have been questions on governance issue of late, both politically as well as on few other areas, but interest rates we still have very high interest rate regime. And fortunately, whole of last year, Reserve Bank of India kept raising interest rates, when the noise level in the industry was against that. The noise was against RBI hiking interest rates, but the RBI kept hiking interest rates. We are at a stage where the interest rates are high, and the global commodity prices come down, and largely from the debt to GDP point of view, we are reasonably better than most of the countries globally. But for actually some of these other issues which are currently facing, which are probably, I would say, the decisions that are being taken.
Have these issues been priced into the market, you think? And that's why the second half of this year could spell good news from a market standpoint? In
the second half, we could see actually the market giving some kind of bounce back and higher level of participation. And we continue to believe that that the second half we could see some bit of uptake. But if you ask me, some of those uncertainties, to what extent is factored in the price, I think to large extent, if you look at the stock market behavior, it's getting priced in actually. And maybe it also gives some kind of an assumption. It has a limited downside. And especially at a time when the things turn a little bit better, both from the global market point of view and the Indian interest rate point of view, we will probably see actually the participation levels rising and confidence coming back in the market.
But do you think we can break out of this 5-year prolonged lull that the market has been facing? Do you think all the pain will get done away with by the time we close out 2012?
Whether we can get back in a complete bullish mode will still remain a question mark. For one simple reason that the kind of speed at which we were focusing on reforms, the post I think 2008 crisis and the 2009, I think India did exceedingly well in terms of carrying out some of the reforms that were needed from the economic point of view, both in terms of fiscal stimulus as well as the monetary stimulus. To what extent that's actually taking shape, and I think if they're able to get some kind of political support, more from the point of view of rolling out some of the reforms. So I'll put actually reforms on two parts. The reforms in the nature of something which attracts forex flows, which is the FDI, and the reforms are more in the form of domestic in nature, where we have done some kind of power sector reforms a few years back, and there is a need actually to increase the power tariff, but otherwise some of these power projects could become a little unviable. So how do you actually make the balance between the consumers and the government finance as well as the people who are operating their business.
Sectors like aviation, sectors like infrastructure, sectors like real estate, retail, even cap goods for that matter, and power, as you pointed out. I'm enumerating all these sectors because they've been finding favor of late in the market.
Yeah.
How much of the excitement that you see in these sectors today is a function of expectation that things would change versus reality of actually seeing things turn on the ground?
We'll have to look at it from two angles. The stock price, of course, reflects most of the time the worst that could happen for the company, or what the worst that could happen for the sector. And that's the way historically the market always behaves. At the end of the day, the market cannot ignore the asset valuation beyond a point. The market cannot ignore actually the price to book of some of these companies which have created beyond a point. At the same time, one cannot of course jump the gun and then saying that the happy days are back for some of these sectors which are bound to be volatile, given the fact that the segment in which they are operating.
Would you be building positions in either one of these sectors?
Yeah, I think from the portfolio point of view, the way I think we look at, we need to have of course a core portfolio which is purely long-term, fundamental driven on the basis of the earnings. I think the companies have to of course create sustainable earnings year after year for us to of course take a bet. So that remains your core portfolio, which is a philosophy which you maintain across all our funds what you manage. At the same time, the market valuations, which are more of a tactical the nature, which of course the kind of opportunities comes every 2 years, this kind of opportunity comes. You see this actually coming in sectors like aviations, sectors like power, sectors like commodities. We need to of course play these sectors only on the basis of tactical call.
So your tactical call on these sectors is positive?
Yes, where we have taken certain exposures in these sectors, for example aviation. Very selectively of course we have taken exposures only on those companies that again we have to look at it, how the company's balance sheet also runs, how is the business operation is running. And though it is an opportunity which one can assume, yes, it's a great opportunity, but it's an opportunity also sustainable. And that's why I think the real crux of identifying such kind of companies within the same space, which I think fundamentally you believe that you can own, and fundamentally you believe that the management has got the wherewithal to tide over these crises, and fundamentally you believe that the balance sheet of the company is managed in such a way, the debt to equity is not so much high where the company will be pushed to the corner and leading to a bankruptcy. These are some of these assumptions which we'll have to make before we pick even the tactical play in the sectors.
Where is it that you're spotting value?
There are certain stocks, for example, some of the large cap PSU banks which have been beaten on very badly. At the same time, we are one has to look at how does the whole equation at the current market price works. And we have turned marginally positive on some of these high quality large cap PSU banks. And the same way within the capital good sectors, we do have looked at some of these companies who are large in size and they play actually very critical role in the Indian economy when it comes to the question of infrastructure space. So then within that you look at some of these companies who will actually tide over this crisis. But the price of course reflects something which is quite dangerous from the company's point of view. But at the same time, if you look at the management capability, the way I think been building the business, there is a value to it. And that's the way we have been taking selective exposure in these sectors to get an alpha on the overall portfolio.